Welcome to dsnews.com. I'm Kelly Snogren, and this is your top default servicing news for the weekend. With almost 1/4 of the nation's mortgage borrowers underwater, Capital Economics says negative equity is still crippling many homeowners and the wider economy. But there is hope on the horizon. If home prices continue to rise, the global research firm sees the potential for 3.5 million homeowners to move out of negative equity positions within the next 12 months. Capital Economics stated in its report, quote, "The reduction in the already limited supply of homes for sale suggests that the annual growth rate of home prices could reach almost 10% by early next year. All things considered, we continue to forecast that house prices will increase by a slightly more modest 5% next year. Even with house prices rising, the negative equity problem will remain a headwind for economic growth for some time yet. But it is important to recognize that particular headwind is now finally beginning to fade," end quote. Fixed mortgage rates showed little signs of movement in the last full week of November, hovering near their record lows. Freddie Mac puts the average 30-year fixed mortgage rate at 3.32% and the 15-year rate at 2.64%. The financial services website bankrate.com says uncertainty surrounding the fiscal cliff has businesses, consumers, and financial markets all feeling a little uncertain themselves, which is good for mortgage rates. Bankrate says we can expect mortgage rates to remain at these levels as long as fiscal cliff talks drag on. As always, you can find more on these stories and all the news affecting your business here on our site. Thanks for joining us. We'll see you again on Monday. Until then, stay with dsnews.com for all of your most relevant default servicing news.